The US stock market keeps defying gravity. Why and can it last? Medibank has put out its corporate health report. How healthy is it? And Paul Rickard now likes Telstra even more. Why? I'm Peter Switzer, he's Paul Rickard, and we're mad about money. Paul, US stock market keeps rising. Are you expecting a sell-off?
Look, I have been, Peter, because obviously the virus, the Delta variant is, impacting the US more. It's impacting parts of Europe, Asia. So I have been expecting the market to be a little more worried, but clearly they're looking through, the Delta variant. I don't understand why Pfizer getting approval perhaps has had such a big impact, but clearly, we saw the travel stocks the other night rebound strongly. The US is really the market's focusing on what 2022 looks like, as opposed to any sort of temporary weakness because of the Delta variant.
Yeah, well, I'm always an optimist, but I am kind of thinking to myself, there has to be a bit of a pullback because the markets are in record territories. And there are, as you say, a lot of problems out there. I think the bottom line is there's a belief that even though the Delta variant is a big contagious problem, it's not as a deathly problem, and particularly with the higher levels of vaccination rates in the USA and UK and Europe and whatever. But over time, I think they're all saying, well, vaccination rates will eventually get rid of negative news and the economy will rebound in 2022 right around the world and up go stock prices. But it just seems like August and September are always really worrying months for the stock market. And that's why I can't be totally relaxed about going too long stocks right now.
Yeah, I think look, if you're long, you stay long. Do you put more money in the market at this point in time? I think you probably just wait a little bit. That's what I'm doing, Peter. Yeah. We're in the middle of reporting season. It's going okay, but we're still taking largely our lead from the US. And today we've got a positive stuff. We've seen commodity prices a bit higher. The Aussie dollar's kicked up. So you've got to say that looks reasonably well for a reasonably sort of good start to the market today.
Yeah. Let's go to Medibank now. It has reported today. What's it told us, Paul?
Well, nothing probably we didn't know, Peter. In fact, I've been a bit surprised just to see how high Medibank has gone. I really liked it when it was around about $2.90 to $3. Bit surprised to see it's up at $3.53. And look, to be honest, they're doing what they're supposed to do. They're actually, as the market leader in health insurance, despite having a 27% market share, they're actually gaining. The old Medibank brand is actually gaining new policyholders, as is the AHM brand. So they reported, I think, about a 39 basis point market share gain. That's pretty good when you're the biggest, right? In a field of 40 health insurers, you're number one with 27% share. To increase share is pretty good. And also their health insurance profit was up quite strongly. So again, pretty much as numbers, the numbers as expected. Dividends a little bit higher at 6.9 cents. It takes it to a full year dividend of 12.7 cents. That's fully franked. That's about a 3.6% yield, Peter, which is okay. It's fully franked. Not much risk on the downside because it's a very stable company, so low volatility. But to me, probably getting a touch expensive at $3.53. Certainly a stock for income players to look at in any pullback. But I think the market's going to like the result, but there's probably not a lot of news we didn't know. And I'd say they get good marks for delivering as expected.
Yeah, I totally agree, Paul. One thing people always have to remember is that with a company like Medibank, the share price can fall, therefore your capital can go down. But generally over time, it'll come back. And if you're in it for dividends, 3.6% looks much better than bank deposits. However, they're not just as safe as bank deposits.
Yeah, and look, that's right. And look, it has been a low volatility company. Originally, I think, floated at $2.35. We're now at $3.50. It's back up probably the highest it's been, or pretty close to the highest it's been. But, certainly under the previous CEO, Craig Drummond, and the current CEO, they've turned the business around. And I think you've got to give them credit for actually, as I said, growing market share is tough in this business when you're the market leader. That means the company is doing well, it's operating well. And that's why the share price, despite some of the negativity out there about the health insurance, headwinds, has been going up. So full marks to the Medibank team.
Become an annual Switzer Report subscriber and get unprecedented access to my 7 investing principles, where I reveal the exact strategies I use to invest. You'll get access to an exclusive PDF, video recording, and even a free copy of my book, Join the Rich Club. With a 30-day money-back guarantee, a Switzer Report subscription is one of the wisest investments you can make towards your future. Find out more at switzerreport.com.au/YouTube offer, or click on the link in the description below. Okay, let's go to Telstra now, Paul. And we've said before that we didn't mind Telstra all the way up to about $3.75, but you've fallen in deeper love for Telstra.
Well, I think in this environment where there are, the demand for yielding stocks, when interest rates are so low and the market's not really wanting to pull back too far and people don't want too much capital risk, I thought I'd put Telstra in that category as sort of a fairly low risk capital stock, yet paying a reliable dividend. And the thing about the result that was really important that came out a couple of weeks ago, Peter, was that not only was it the first increase in earnings, in other words, the second half was higher than the first half for the first time in decades almost. So Telstra is actually starting to generate higher earnings. Is that their guidance for next year of between $7 and $7.3 billion? That's an EBITDA. That was up quite strongly on this year's result of $6.7 billion. And importantly, is getting close to their target of about 7.5 to 8.5 that they need to be to maintain the 16-cent dividend. So the takeout of this is Telstra has turned the corner. It's partly a beneficiary of the fact there's less competition in mobiles following the merger between TPG and Vodafone. But these things happen. Peter, 4 goes to 3, and suddenly prices just edge up a little bit and revenues go up. We know what competition does, but so does reduction in competition. But it's also taken a lot of cost out of the business. And again, not a company making a lot of noise out there, but its share price has been a big winner this year. And it's one of the best performing stocks in the market. I think there's a bit more in Telstra. I'm not a seller at these levels. $4 is no magic level. I think it'd go a little bit higher. And the other factor I'll throw in, Peter, is we saw the phenomenal price that Telstra got when it sold off 49% of the towers business. That's just the mobile towers. We're actually set up, it's actually put all its infrastructure into another business called InfraCo. That's all the ducts and telephone exchanges and all the other things that go into making the communications network. At some stage, Telstra will probably do the same to that and either sell a piece or demerge that. And again, that's the sort of asset that is so secure that there could be huge demand for. So I still think there's a bit of upside in Telstra. Look, it's not a massive buy, but I think, can Telstra go higher? I can't see why it can't. It goes ex-dividend, I think, today. So we're going to see a drop in the share price with the ex-dividend. But over time, I think we'll see Telstra back into the 4s.
Okay, that's Paul Rickard not hanging up on Telstra. I'm Peter Switzer, he's Paul Rickard, and we're mad about money.